With inflation at an all-time high, the Fed announcing their plans to raise interest rates, crypto seeing major sell-offs, and most growth stocks dipping below 20%, it might be worth exploring alternative assets that are uncorrelated to the stock market. So we put together a list of 5 of our favorite alternative investments. Please note none of this is financial advice and is for informational purposes only. 1. Wine. As an asset class, wine has only been accessible to the ultra-wealthy and old money, but has technically been an investment for centuries and has had a long history of strong returns on investment, averaging around 12% over the past 40 years. Like other physical goods that people own like watches and bags, fine details such as brand, location, and in this case grapes all play a role in the pricing and value of the bottles. The older a bottle of wine gets, the rarer it becomes, and the more valuable. Interestingly enough, because it is something you can consume, non-investors who drink their bottles from the same winery and age range increase the value of your investment. Depending on how you invest, you also have direct ownership of the wine. So even if the wine company were to disappear tomorrow, you would still retain ownership of every bottle in your wine portfolio. While wine might be an interesting asset, you simply cannot go to your local wine store and pick up a bottle, hold on to it and resell it for a 14% profit. There are many nuances to wine investing. Most specifically, age and region of the wine are the leading indicators to the value of the asset. Movies such as Rotten Grapes highlight the insane market value around wine and the people involved. While that movie focuses on fraud, companies today are allowing non-accredited investors to get in on the asset class, while providing authentication and storage. This video is not sponsored, but platforms today allow for an ease of use for everyday investors to get in on the action. Like every asset class, there is positives and negatives. If the doom preppers are correct and the end of the world is upon us, at least you can drink your investment. You can't say the same for stocks and ETFs. 2. Music royalties. In today's world, it's hard to imagine life without streaming services. The ease of use and access to millions of songs has completely changed the way we consume music. In 2020, music streaming revenue hit $13.4 billion worldwide, and the number of subscribers worldwide reaching 487 million. Every time a song is played on your favorite streaming service, a portion is paid to the people involved in making the song as well as the streaming service. While this number given to the artist might be low and has definitely raised criticism, this can be an attractive asset for long-term thinking investors. The biggest sale so far comes from Bob Dylan, who sold his publishing rights to Universal Music Publishing Group in December for nearly $400 million. On one hand, it is a great option for songwriters who want to cash out now. On the other hand, investors can earn income for a long-term strategy. Today, non-accredited investors can add music royalties to their portfolio. Traditionally, deals that involve the sale of royalties were done behind closed doors and no way for an average investor to get access. Today, there is a market for artists to sell their portion of a song and investors to earn long-term yields on their investment. Companies such as Royalty Exchange are making it easier for non-accredited investors to get in on the action. The beauty of this asset is once you find a deal that looks good, it is truly a passive income. You sit back and get paid quarterly and have to do nothing post-sale. 3. Art. While there is massive hype around NFTs and major companies exploring the idea of entering the space, the fine art market is still roaring with yields. Global sales of art reached an estimated $50.1 billion. While art is not that liquid, it makes great for a long-term strategy that comes with many tax benefits. Platforms like Masterworks have been popping up, allowing investors to purchase shares of an art piece. Investors will then receive profits when the artwork is sold. Artworks sold on these platforms have achieved a return of 12 to 19%, which is higher than most stock market returns. Similar to wine, details around the artist and their notoriety all play into the value of each piece. The current record price for an artwork sold is $450.3 million paid for Leonardo da Vinci's Salvator Mundi, which was sold through Christie's auction house. 4. Farmland. As the saying goes, no farm, no food. More than half of the continental U.S. land is used for agriculture. The majority of that land is used for livestock, But crops are the most valuable kind of agricultural real estate. Even with such a large portion of the U.S. being for agriculture, rural farmland has been sold to developers for suburbanization and urbanization. Add population growth to the equation, and the laws of supply and demand work favorably for farmland to be quite the attractive asset. Companies such as Acre Trader, Farm Together and Farm Funder are allowing investors to get in on the action. It is also worth noting that as part of the great wealth transfer, billions of dollars of farms and farmland are going to change hands over the next generation. With many children of farmers increasingly not interested in taking up the family business, is an opportunity for investors to get a piece of U.S. farming. 5. Real estate and short-term rentals. You can make the argument that real estate is far from an alternative investment, considering that 90% of millionaires have some form of real estate in their portfolio. However, the real estate market is changing thanks in part to new technologies, platforms, and COVID. Key players in this are real estate platforms such as CrowdStreet and Fundrise. These companies allow investors to partake in real estate without having to deal with any of the headaches around building, renting, or maintaining the property. COVID completely changed the housing market, and many people are waiting for a bubble to pop. Investing in real estate through a platform may be an easier solution. There is one section of real estate that has been thriving: short-term rentals and vacation homes as an investment. Sales of vacation homes skyrocketed during the pandemic, with sales outpacing the growth of existing home sales by nearly 300%. The short-term rental market was valued at $87 billion in revenue in 2019, and that number continues to grow. It is expected to have a compound annual growth rate of 3.4% over the next 5 years. One major reason for this is the shift to work from home. Having the ability to work from anywhere allows prospective customers and investors the opportunity to benefit from staying in different locations. People can invest in short-term rentals from a few different angles. On one hand, people can rent out their apartments or homes for a little side income, or they can be full-fledged investors and buy a home with the purpose of putting it on a site like Airbnb. Some of the most profitable vacation homes are ones that offer customers a unique experience and are an escape from the big cities. According to Airbnb, fastest-growing markets are Hudson Valley, New York, revenue is up 85% year-over-year, Big Bear, California, up 73%, and Lake Tahoe, California, up 67%. Thanks for watching. This is just the beginning of this channel, and we plan on having more lists and stories around certain businesses, products, and investments. See you soon.